All right, yes. So going over the breakdown video, it's a bit delayed because I'm currently in Colombia, or I have arrived in Colombia finally, and now getting settled, etc. So I'm back for as you can call it. I'm hopefully fully back now. Without further ado, let's dive into the breakdown. So first, of course, let's go over the economic calendar, which is quite important. So last week we saw CPI on US dollar, CPI US dollar for Tuesday right there, which is quite important to understand because then already that filters out Monday and Tuesday, which I don't really want to trade right there. Then we have Thursday as well, unemployment claims. We have PPI, core PPI on Wednesday. Now, I know if you've seen the list on the economic calendar, the big three, etc., then PPI is volatile. As in, yes, it is volatile, but for me, PPI is tradable. As in, it's not something that is something I would completely ignore and I would stay out at all costs. Of course, if it's at that current moment and I take an entry at 8:30 exactly, then I'm like, might want to wait a few seconds before I enter and let PPI do its thing a little bit. But that's the same with, for example, a Fed member talking. So overall, CPI is something I truly want to avoid. Core PPI for me, it's fine. As in, it is tradable. Now, then after core PPI, we see USD unemployment claims. That's of course beautiful, and we have building permits on Friday as well, which is absolutely perfect. Now, that is crucial to understand because if we take that into account and we take a look at the dollar as well, then first of all, the thing we are seeing on the dollar is we had this daily fair value gap. That daily fair value gap did not expand higher. As in, yes, it expanded higher, but it did not create a new daily fair value gap off of that, which then again, that makes it a little bit more difficult. And the reason for that is because now you need to go into the 4-hour time frame to look for new context, whilst we just had daily context taken. Now, again, there's nothing wrong with that. As in, I usually say, and in the finishing touch videos, I also mention that if daily context is taken, ideally you want to either stay on the same time frame if there is a new daily fair value gap being created or whatever, or you want to go down one time frame to go into the 4-hour to look for new context. So that is perfectly fine. The only thing is that still we need to take into account whatever is happening on the daily time frame. So on the daily time frame, we can already see that we are not creating a new daily fair value gap. So on the 4-hour, yes, you can potentially take that a new context on the 4-hour to look for new longs, etc. So if you take a look at that right there, then on the 4-hour, yes, you can do this, as in you can look for longs right here. But the thing is that we're not creating a new daily fair value gap. So it's extremely suspicious, you could call it right there. And that's also why then I wanted to wait for CPI to show its hand. As in, if it wants to go higher, I just want CPI to create that next discount rate. And it's sort of these things stacking up. As in, we're not creating a new daily fair value gap. All right, we have CPI on Tuesday. So I already know I don't want to trade Monday or Tuesday. So that is pretty clear in my eyes that US dollar pairs, etc., there are just out of the conversation almost. And then the next thing is, all right, if I just want to wait for CPI, then I'm just waiting for a new discount rate to be created. And if that doesn't happen, like we're seeing right there, and we see a huge move down, okay, let me switch my bias. That's as easy as it is, right? So again, that's me over exaggerating maybe a little bit, but the thought process behind that, again, behind switching that bias and why that is okay, is because now this monthly fair value gap right there is sort of overtaken. As in, it's completely out of the conversation. It tried to create this ST, which it did, and it tried to create this RE, which it failed to do. So this monthly fair value gap clearly had its chance to push higher, but it didn't have the strength to do so. So overall, we could say, all right, we are now very bearish, and if we want to do that very fast, if we want to continue lower very fast, then this daily fair value gap being created right there can just push price lower as well towards the next discount rate, which then you just go over the time frames. All right, what is the next discount rate? What is a discount rate in itself? A discount rate in itself is already swing low, fair value gap, mitigation block, breaker block, order block. That's it. So right there, all right, we have this swing low right there. That's the next discount rate that we can target. Perfect. So Then we just look for the delivery towards that discount rate. Daily fair value gap. Now we are potentially creating a new daily fair value gap, which we can sting into tomorrow, potentially, etc., to continue lower. So that is the thought process behind that. So you can make it yourself very easy or very difficult. As in, if you're trying to trade ahead of CPI right there, you make it yourself pretty difficult. And again, of course, you can take a trade ahead of CPI potentially if it's a very short trade on that Monday on something on the Australian dollar or something. But overall, why not just wait a few days? So you sacrifice 2 days to have a very clear bias for the rest of the week. And that is very important. Now, on Wednesday as well, the reason why I waited for Wednesday is the same exact reason right there. I just wanted to wait for this daily fair value gap to be created. Yes, on the 4 hour, you can potentially look for shorts already. And that is when you have price action like this. So before we create something on the higher time frame, what do I mean by that? If we are trading and we're looking for context on the 4 hour or even the daily, then the time frame above it will also, with time, create new context. Again, to fully understand that, if we are having 4 hour or X, we're having X context, then we need to still understand what's happening above us. Meaning that on the 1 minute, you need to understand what's happening on the 5 minute. On the 5 minute, you need to understand what's happening on the 15 minute if you were to enter, etc. The same on the 4 hour right here. You have this 4 hour fair value gap right there, but you still need to understand that above you, there is what? There's a daily fair value gap almost in the making. So when you trade this 4 hour fair value gap lower right there, it takes that context low, etc. Overall, it's a great trade. But this is where that understanding comes in again of not following through. And that is important because when this is a sweep, instead of actually following through with a new fair value gap lower being created, then that tells me that indeed we do want to come up to the daily fair value gap and then continue lower. So in that moment, for me, if I can sacrifice that Wednesday, I've already waited Monday, Tuesday, Wednesday. So why not just wait another day to make sure, all right, if we do trade into that daily fair value gap, again, is there a 100% guarantee that we will trade into the daily fair value gap? Absolutely not. But if we can understand that once we do trade into that daily fair value gap, it's way more high probability than it is of that 4 hour fair value gap. So that is important to understand overall as well. And again, we can tell that by the lower time frame right there, not creating that new daily fair value gap, 4 hour fair value gap lower. So not following through overall. Then that is when you need to take into account the 4 hour, the daily time frame. So the time frame just above it. And it's the same with the daily, that the daily, you can trade daily fair value gaps lower. But let's say this daily fair value gap had a weekly fair value gap above it right there in the making. Then it's like, I still want to pay more attention. As in, it requires more focus to understand, all right, if the daily doesn't follow through here, then I need to be very aware that we are also creating a weekly fair value gap above that daily fair value gap. So I need to understand that in order to have that full context, that high probability context. That is why the third candle that is being created on any time frame, which creates the fair value gap overall, it's important to understand right there that it requires more focus, more attention on reading what the time frame below it wants to do as well. Because tomorrow, like I mentioned, we can come into that daily fair value gap to then continue lower. But if that daily fair value gap shows any signs of not following through, and that is also being told by the 15 minute, if you have a 15 minute ST that does not hold, etc., then I already know that if the daily right there does not create a new daily fair value gap lower, etc., no fair value gaps lower on the 4 hour, so to reading those fair value gaps again, that already tells me, okay, now I think we might trade into the weekly fair value gap first before we deliver lower. So that is that reading that is very important, and the only thing it really requires right there is focus, as in focus. And you can only be focused the way, or I would say a big factor as to why I understand those fair value gaps is because I'm only focused on fair value gaps. If I'm focused on power 3, if I'm focused on all these different little things, then how can I ever be focused on one single thing? And it's futile, right? So I hope we all understand that as well. Now, the next thing is, of course, off of that Wednesday. So we've basically ignored the first 3 days for the US dollar pairs right there in this week. Then I want to trade Thursday and potentially Friday. If it didn't deliver yet, then we can perfectly fine trade that as well. Now, if we take that into account and we take a look at Euro, US dollar, Australian dollar, US dollar, and GBP, US dollar. Now, I'm sorry because of the move, and I was already trying to make a new forecast. I deleted everything off the breakdown list. So I'm not too sure what was exactly there. So I'll try my best to go over on what I feel is necessary to touch on in this particular week, which was mainly, again, it's huge. Most of the time, it's the economic calendar, which is extremely important to understand. Other than that, it's just the economic calendar and reading price action in itself. Now, Australian dollar, US dollar, Euro, US dollar, all had potential moves of the daily fair value gaps that were being created right there. And I chose EU at that moment right there to trade. And the reason for that is because it was the strongest overall. And there's different arguments to be made right here. Because EU right here was the strongest. AU was the weakest. GU was in the middle. So I did like GU. And the reason I did like it is because it had the overlapping right there. It had the overlap part, which EU just simply didn't have. But when it came to the lower time frame overall, I did like EU more, and it gave the setup earlier than GU. So that's also what I mentioned in the forecast, that if EU comes back above that previous day low, so let's take a look at that. If EU comes back above the previous day low, which is just the fair value gap high right there, then I would want to trade that. I would want to trade EU overall. Because the arguments to be made against GU, etc., are also on the monthly time frame, we were still inside the monthly fair value gap, whilst EU was the only one that had already overtaken the monthly fair value gap. So there's a more clear path. There's less resistance on EU overall, which Australian dollar, US dollar, which we can see is also just inside that monthly fair value gap still. Doesn't mean it can't continue higher, but it does mean that it might have more resistance overall going against it. And that is very important to understand. So on EU, on that day right there, which was Thursday, I went into the lower time frame, onto the 15-minute right there. And on the 15-minute, we could already see that we had this sweep right there, or just a rejection of the fair value gap high. And we got the ST right there, and we got the re in London. Perfect. That's exactly what I want to see. I always want to see at least a fair value gap being created in London. If it's fully in Asia, then I don't really want to enter. Now, that is what I would like to see. So that is also where I entered of the creation of the fair value gap itself, because we still had enough context to go for it. If you want the full understanding behind that trade, again, I would highly advise to watch the trade recap. Otherwise, it feels like I'm going over things twice, which of course is not a bad thing, but to make it more efficient for both of us, I think that could be more beneficial. Now, right here, that is where I entered. Then eventually, of course, we can look to follow through on the 1 hour time frame. On the 1 hour time frame, there is a thing I can go over more a little bit. It's because we had a rejection, a pretty hefty rejection right there off of that swing high. Now, it's not super important, as in at that moment, I just didn't like the rejection that we had right there on the US dollar pairs. So for me, I wanted a little bit more confirmation, still with the same trade ID that we had on the 1 hour, just a little bit more confirmation on the 5 minute, etc. So what I do in that moment, and again, if you are not comfortable with this just yet, or you think it's, or you feel like it's a little bit too much right now, then perfectly fine. Just enter off that 1 hour. But for me right there, it was fine to go into the 5 minute right there, just to wait for another fair value gap higher. So let's see, another fair value gap higher right there, just the ST, just any fair value gap higher, and then enter off of that, just so it has some confirmation behind it. Now, eventually this all failed, and we swept this low even, and then we continued higher. So it was very interesting price action overall. Then eventually we swept this high as well. We had an aggressive reaction right there. Now, this leads me back to the disrespect boundary. And that is what we'll see a lot as well in the new enrollment, which is very important to understand. And the reason for that is because right there, when we're sweeping this high, that creates new context overall. If you give it a little bit of time, it's a step-by-step process again. And the step-by-step process is not me expecting a sweep of that high. So it's me actually expecting a run on that high. As in, I'm expecting new fair value gaps above that high to be created, to continue higher actually. when that doesn't happen and we have a sweep, so very late during this lag lower actually, I think, okay, this is weird. We are clearly sweeping this. We are not respecting this bullish order flow anymore. As in, if we want to continue higher still, we can continue higher off this right there. That bullish fair value gap that is sitting right there, which we did not do clearly. So overall, right there, after those steps, so I'm reacting more so. I'm reacting to price action. I'm reacting, all right, why are we not closing above this high? Why are we not creating new fair value gaps higher? Why are we not respecting that bullish order flow? There's 3 questions that goes through my mind. Then afterwards, all right, now we might be able to switch our bias overall. And switching that bias is understanding where then the new context happens. Because when we are trading, we're always using context. And what I mean by context is we're always using areas to trade in. As in, we need to understand certain highs that are getting respected. And what I mean by that is when we sweep this high, then if we target the next discount array, which can be this intermediate low, which is just the previous day low. So when we have context, for example, this context, daily fair value gap to then higher, it's just an intermediate high, right? That we're targeting. Can also be a previous day high, can be previous day low, can be previous week high, can be previous week low. That is because on the lower time frame, those are intermediate highs, intermediate lows. So that makes the target a little bit easier. So overall, right here, once we are sweeping this, and we know this is the next target, most likely, because that is the only discount array on the daily time frame, on the higher time frame we're having right there. Not on the 1 hour time frame, on the higher time frame. All right, that is quite interesting. So then this right now is your premium array, that's swing high, premium array. Then this right there is your context high. Not your typical context high or low, but it is a context high. It's a disrespect context high, etc. To then, what is then the next discount array? It's this low, right? So this in itself is your new context, where you usually have your very typical context, like low to that high right, to that high right there. That is your typical context, your typical textbook context. This is a little bit different, requires a little bit more thought behind it as well. So right there, this becomes your new context overall, which then you just use the same thing that we're constantly using is order flow. Order flow to see which highs are actually protected. This high is protected. Is this high protected right there? Currently, not really, right? Because there's no fair value gap lower off of that high, off of that fair value gap. All right, so that could even get swept. So on the 15-minute, we can understand that if we create new 15-minute fair value gaps lower and we actually sting into it before we take out a low, then that could be quite nice to potentially target lower as well. After that, it's the same exact thing where you have context. And the thing we need to understand as well right here is I don't like the fact when we have a daily fair value gap right there and we come into it twice. As in, yes, textbook is after that first candle fails to expand higher, then we could expect lower prices even based on candle signs, etc. But this is also where it is important to read the lower time frame still, because if we just fully ignore this 15-minute after this previous day low sweep right there, and we ignore the full 15-minute ST that is happening right there off the target that we had right there, that just does what? That creates again that new context. And this is almost seek and destroy price action right there, which creates that constant context from swing high to swing low, swing high to swing low. And then eventually we follow through. So overall, the narrative is still, or the bias is still, we're overall still bullish. So yes, that daily fair value gap is not ideal. As in this daily fair value gap right there that we had, which we initially traded off of on that Thursday, is not ideal. But still, once we get this lower time frame rejection right there, then obviously we don't just want to keep on shorting because Ario said candle signs needs to do exactly this. No, we still need to react and adapt in that sense. Overall, those are general rule of thumbs and etc. And the way I want you to see that is indeed as a general rule of thumb, and that they do their job because we read candle signs above this high, that swing high right there, that led us to now understanding that this low right there was the next target. After this low, that is again a discount rate, gets taken, then we still need to understand, once we get a rejection like this, we don't want to look for shorts overall. So that is very important to understand, because overall the narrative was still monthly value gap overtaken, daily value gap can push price higher. Once we get that previous day low sweep, it's not ideal, but still we can react and adapt. That is important. All right, hopefully that makes sense. So that is what I did throughout the majority of the week, was focusing on EU. So once I had that Thursday as well, on Friday I looked at the market, but I did not actively trade it. And I mentioned right there, after this sweep, I mentioned in the Discord, if anything, if I was to do anything on EU, all right, then I do want to follow through on these highs right there. Then I do want to see these highs get taken right there. Because overall, we are still bullish. So even though Friday, that's a characteristic where Friday does not want to continue the trend overall, still, we still need to react and adapt, and still need to understand that's a general rule of thumb. And if that doesn't happen, then the belief that Friday never expands or never continues the trend is a very dangerous belief. And that is why certain beliefs in trading are very dangerous. As in, yes, there are general rule of thumbs, etc. And there are rules that we can stick to. But overall, we still need to react and adapt to whatever the current market is giving us. That is quite important. Now, on GU right there, we also saw the exact same thing. It only was, again, a bit more weird price action. So if you were to trade GU right here, then I would not necessarily say that you had a bad trade or it was extremely lower probability than EU. No, not necessarily. And I do think that it's a great trade opportunity. If you took that, if you got taken out, nothing really wrong with it in my eyes. It's the same thing where we do sweep that low right there on the Friday and we continue higher even after that. So it's again that reacting stage that we can, of course, continue to work with overall. Now, then next thing I want to touch on is crude oil, because crude oil was a very, very lovely price action. And the reason for that is because we had the monthly value gap. Now, to understand the full context, it is of course very beneficial if you also follow along with the forecast videos, because it makes a lot of sense to see the thought process in sort of almost live real time. Of course, it's not fully live, but to almost see it in live real time, to understand what I'm looking at, why I switched that bias, etc. So the monthly value gap, again, we had this monthly value gap, which we already did not really expect higher prices off of right there. So we can look to overtake that monthly value gap potentially. Then on the weekly, we had nothing really going on. So on the daily, we had a daily value gap right there. So it's a battle between this first monthly discount and this daily premium. So that is, again, that 50-50 battle where price is just a little bit of seek and destroy, because it's battling between the first premium and the first discount rate. Now, this, if we want to continue lower, we can continue lower off this discount rate. If we want to continue higher, we can continue higher off this monthly discount rate. Sorry, I said daily discount rate. That is daily premium rate, of course, in the form of that daily value gap lower. So it's a battle between discount rate and premium rate. Now, in the first moment, I do not want to take a trade off of this first sting into that daily value gap. The reason being for that is because the first sting between the first premium and discount, especially on the higher time frame where you're seeing discount rate to then premium rate, that first sting right there, when this is on the, we need to understand that this monthly is on the higher time frame, as in it's above the daily time frame. So we can understand that this monthly daily, sorry, let me catch my train of thought again. That monthly discount array can reject, even though it does not want to hold, it can reject price action, as in it can have a rejection higher a little bit, coming high into the daily value gap right there. That is important to understand, because then this candle right there on that Friday is not where I want to take a short. This Monday is not where I want to take a short. This Tuesday is not where I want to take a short. I want more confirmation, which, when in doubt, you wait for another fair value gap. So on the 4 hour, we had right there, we had just bullish order flow established overall. Then we had this sting into these fair value gaps, and we tried to continue higher. When this happens right there, and we fail to follow through on these highs, that is again the same as the flow trading plan. On the 1 hour time frame, etc., this creates context from that high to that low. That is again that new, not your typical context, but that is new context overall. So that is where you want to look for your new trade potentially. So on the 1 hour, we can also look, all right, we have just created a lower time frame. So on the 1 hour, an ST right there to continue lower from. So that is very overall, very nice price action. And that is again that disrespect boundary. And eventually we can look to follow through. 4 hour value gap right there, which the 4 hour value gap on the 15 minute, we had a very nice 15 minute ST right there, which you could have gotten involved in as well. And on the 5 minutes, we had the same exact thing, which 5 minute ST plus a very low 5 minute re right there. If you waited even a little bit, you could have gotten involved there, but this was already a perfectly valid trade. The only thing I don't really like about those very low re's is because the stop loss placement is all right, as in, yes, we can still know where to place our stop loss. Only thing is that we are experiencing more drawdown, which means that going break even is a little bit more difficult. Overall, the RR, of course, is also a little bit less and a little bit harder to take profit overall. So it's like, yes, I can understand that it is still valid, etc. But overall, it's a little bit more of a difficult entry. Now, right there, you can even choose if it is a very low entry and you have the experience, etc., to not get very emotional, to not get caught up in those emotions. Then you can just choose to use the overlapping bar, right? It's eventually what we are working towards as well, where the intuition and experience comes into play. Now, of course, when we disrespect the 4 hour bullish order flow into that daily value gap, now we can look to target this low again. So it's a disrespect boundary inside the disrespect boundary. It's very important to read that. And it's the same thing that we're seeing right now, which is the current week. Now, of course, this is the current week. I haven't made a forecast on it just yet, but sort of a forecast you could argue right now, where we have this sweep of this low. After this sweep happens right there, again, sweep, just we have this bearish value gap, bullish value gap is higher, very odd price action. If we want to follow through, we should have followed through on this low right there to then continue lower, which we did not do. All right, now it's the exact same thing where we have the disrespect boundary to now target this high right there again. So then it becomes very interesting again, where we potentially have the daily value gap, which we can continue higher off of. If we do not want to follow through, the same things overall, constantly the same exact things. If we do not want to follow through on this 4 hour value gap, which it currently seems like we do not really want to do, then we wait. We wait for the daily value gap right there to then get involved off of that right there to then continue higher. So that is again the same exact premise. Now, let me see if there is something. Oh yeah, Nasdaq, YM overall, ES as well had the daily value gap higher. At that moment in time, I preferred EU overall, so that is why I also traded that. So nothing really to touch on right there, as in it's the same things, the same concepts apply right there on why things happened, etc. So the reason why Nasdaq or the reason, if I didn't look at EU, let's put it that way. If I didn't look at EU first, then if I did look at Nasdaq, I would have also taken a trade right there on the 15 minute, etc. We just didn't follow through overall, which again is a little bit of a shame, but I do not think that it's a bad trade opportunity or anything. It was a great trade opportunity, so nothing wrong with it in that sense. Then on the crosses, was there anything to talk about? Euro Canadian dollar potentially. Let's see, was there anything we needed to touch on? There was one thing that I wanted to touch on actually, which was, excuse me for this, by the way. I know it's not the best, but it is what it is currently. It was one of these, I believe. Which one was it exactly? It was one coming off the weekly fair value gaps. Or not exactly the weekly value gap, but almost came into the weekly value gap to then continue higher overall. GBP Australian dollar, GBP Canadian dollar. Let's see, GBP New Zealand dollar, not GJ. New Zealand dollar, JPY. No. I can't really seem to find it. Excuse me for it. Yes, this is the one. All right, I found it. Australian dollar, Canadian dollar. Did not come into the weekly value gap overall. Now again, once we already see the rejection higher, what goes through my mind is that, all right, it might be just a broker issue where the broker did not come into the weekly value gap, and on a different broker we might come into the weekly value gap. That's why on NASDAQ, ES, on CME is very powerful because you know when it absolutely has come into a fair value gap or something, which Forex just sometimes lacks. So here on the daily fair value gap, we already had the move higher. All right, then we just react. Daily fair value gap right there to continue higher. Very nice price action overall. Then on the 15-minute time frame, we had the first potential entry, which was right there. Now this was even a great place to place your stop loss right there. But it's important to understand, and that is actually what I want to go over on GU as well. It's important to understand right there that at this moment in time, it's a very small stop loss. And once you have all this context going for it, there's nothing wrong with putting it a little bit lower. Now, both approaches, there's nothing wrong with it. So don't get me wrong, it's just my thought process overall. And eventually we just followed through as well. Let's see if we did get something on a 4-hour even. A 4-hour value gap there as well. Did we get something on a 5-minute in there? Let's see. 5 minutes. London created this new ST. All right, not too bad actually. Not too bad on the Friday. All right, now the thing I wanted to go over and what just popped into my mind was we had a question on GU, on stop loss placement. And let's look at this. Because we had the daily value gap, the same exact scenario we went over on EU. And then we also had GU potentially delivering right there. So let me actually find it. I'm very lost right here. It's that 16th of November. Yes, it's right here. Yes, so we had the daily value gap. The daily value gap was below this low overall. Let's just assume that it was around this price action right here. But that's the daily value gap. Now, after that, we got the ST. We got the ST higher right here. Very nice ST. So then we had the RE. The RE was right there. So based on our logic and based on the value gaps being in context, this could be your stop loss placement right there. Does that make sense though? And that is what I'm trying to sort of explain here, because I do not think that makes complete sense. And the reason for that is because we had a very aggressive move higher in the initial leg, which is the ST leg. 37 pips. So let's say 40 pips. Then we have this second leg right there, which is half of it, 20 pips. Now, if that is half of it right there, and just visually, again, you don't need to measure it, but I just see that visually that this leg did not expand above that high overall. So it's like, yes, it is a valid stop loss placement mechanically. Is it logically that this stop loss placement will work out? Not really. And that is, again, that's sort of a little bit more difficult for me to explain right there. But I hope that makes sense, that that first leg is just way more aggressive than the second leg higher right there. So in relatively seen, that doesn't make a lot of sense to then place our stop loss actually below this low. And at that moment in time, I also saw this, and believe me or not, you don't have to believe me, but at that moment in time, I always prefer to cover at least this swing low, because that's the overall breaker that we're working with, or cover this low right there. So that is the way I would approach that. Now, would it have hit 1 to 2? Probably not right there. Or if you did get tagged out before it, depends on where you would have placed your stop loss overall, your spreads, etc. Might not have gotten tagged out. It is what it is right there. Then eventually we did have to move higher as well. So hopefully that makes sense. And this was the breakdown. It's not the breakdown that I fully wanted to have, because I didn't have the breakdown list, etc. Was a little bit out of touch with the market, you could call it as well, because I was busy with my move. But hopefully it does make sense, and I did touch on the most important part about it. So let me know if that makes sense. All right, perfect. Thank you.